Yo, what's up, guys? We're back with another video, another Sombonyo series video. This is episode 3. Sorry, guys, for the delay. I've had a really hectic weekend. I'm not gonna even lie, and yeah, we back to business now. Another day, another dollar, and you know what? Let's kill this deck this week. Yeah. But anyway, let's get back into it. This is our 6-month fair value gap here that Nasdaq initially turned off this year. So it turned off this 6-month busy. 6-month busy. Right? After turning off that, it had one high in mind. This high. So guys, the highs in this video will be marked with blue and the lows will be marked with red. The highs that we are usually targeting. Okay, that's a high. And in this area, the 50% of this candle right here, where is our Fibonacci retracement? Yes. The consequent encroachment of this area is the 50% mark. It's a really important area when we are trading. Because these are the type of areas markets bounce off. Let's write right there. 6-month CE. Okay. Right there. Then, okay, we have our high there. Let's go to the 3-month chart. On our 3-month chart, it's a different type of thing. We can have a consequent encroachment for this candle. This candle's consequent encroachment is right here. Sorry, right there. That's the consequent encroachment of that area, which means that is a powerful 50% area on the market. When the market arrives there, it usually bounces off. Sorry for those. Here, there's a fair value gap, a 3-month busy, where we turned off. And if you look at the 3-month busy, we almost turned at this candle's consequent encroachment. So let's label this quickly. 3-month busy. Okay. Oh, for those wondering what's a busy, it's buy side imbalance, sell side inefficiency. It's another way of putting the fair value gap. It's easier to remember than rather than having fair value gap everywhere. So it's gonna confuse you when you look at it on a lower time frame, because they're gonna be a lot. Oh, let me fix the visibility of this too, so that when we get to the lower time frames, it doesn't show. It's gonna stop by days. These two are gonna stop by days. Yeah, cool. Then, also, we can add the consequent encroachment of this area, right? And this fair value gap. We can add the consequent encroachment for both. You know what, let me add it while I'm at it, because I really said this episode we're going to focus on something new and give new juice to everything, you see. So, wait a minute, you're telling me they're at the same area? Nah, that can't be possible. Right, so I was wondering how that can be possible. guys for that. It's fine. That's the 50% mark of that fair value gap right here. So it takes 3 month BC CE. CE is for consequent encroachment, meaning the 50% mark of the area. Right. Here, since we turned into this area, we are targeting this high first. This high, right? So that you get familiar with what we are targeting. So, here, the market went up. The market went up until here. When we got here, it came back down into this area. When we came back down into this area, we shot up, going up, heading for these highs. Then, here as we are going up, obviously the market has to rest to get a break. That's why it came back into the gap it left, so that it can find power, find the energy to go back up again. It's like the way you spend your whole day at your best, then at night you go sleep. That's a perfect analogy for it. Where it comes back into the area, this is the sleeping part for it to rest and get the power and energy to go up again, to target 1, 2. Those are the highs. And if you look at this right here, there's a 3 month fair value gap right here where we turned in and we respected it so perfectly. I'll change the color for this one so that you can see the difference. Yeah, orange would be fine. And it's a 3 month BC. So we turned right in the 3 month BC, went up. We also respected the 6 month one, but it was much more cleaner to get a setup in the 3 month BC, and we went up. And from going up like that, these are the 2 highs we are initially targeting. As I said, we went up, exhausted and slept at night, came up again, and we are exhausting and going up. At times it might happen that the market breaks this high, comes back into this area, respects it fully, then goes up and breaks the high. It might happen sometimes. But this is a bigger type of chart. 3 month chart is really, it takes time to play out in these type of charts. Then we go to the monthly one. As you can see in the monthly one, right here, this is the area that I marked last time that I said, okay, we are actually targeting. But obviously it was not like a video that I marked it in. It was those self videos where you mark something with, like, for yourself to say, okay, this is the area that we are targeting initially. But anyway, it's gonna take months to get there. It's fine like this. Let me put it back to the colors so we get back to business. Yeah. So this is a 1 month SIBI. As a 1 month SIBI, you can see with you, okay, this area is gonna force us. It's literally gonna force us to push down normally. That's what this area does. And if you look at exactly what happened here in the monthly, like, you see that it passed this area, like it violated it and closed outside. Then after violating this area, it came back down into a fair value gap to get power to go up and break this high again. But if you look at it clearly, where it turned, you can see that these 3 candles are called, like, some people don't explain what an order block is. They may say, no, this one candle is just the order block. These 3 green candles before the market turned, 1, 2, 3 are one order block. 1. And the market, when there's 3 candles, write this down. when there's 3 candles on an order block, the market normally tends on the second body, like on the second candle on its body. That is the most precise entry in any time frame when you have a 3 candle order block. I will give that to you. That's the most precise entry. And if you look at it right here, look where it turned on the body. It might have been a little higher than that, but it turned on the body. Because if you look at the next day, it respects the wick of this green candle and goes down. And in the retail mindset, let me put you also on that. Here, what are we saying? Most people are going to say, okay, retailer's mindset, we're going to come back, break this high. After we break this high, we're going to go down. That's an M formation, right? Here, people see a W formation to go up. I know. Because I once traded retail, so I know what the masses are thinking, right? So, here we have our 1 month BSI, which we are within right now. And the month obviously is not over. It depends. So what we initially want to see, right, within this month, is to see whether we close above, within, or below it. When we close within and below it, we know that, okay, the next month might start going up a bit, right? Might start going up or take out the highs. But that doesn't mean it has violated it. It might take out the highs and go lower, as long as the month hasn't closed. So if this month closes within and lower, we know that we are still on the sell side, right? And to make it much more interesting, wait, I'll utilize that on a lower time frame actually. Not going to put it here. To make this much more interesting, we'll look at the weekly chart, because as you can see, we're still targeting the same highs in this area. And we already marked that this is our 3-month BSI. Here, we have our monthly BSI, but I don't want to really mark it down. Oh, you know what? Let me just do it. Where's this candle's high? Wait a second. Okay. Just wanted to see this candle's high. Here we go. Okay, let me do this with this one. Change color, put orange too. Okay. This is our 1 month. Let's see. No, yeah, it is. Sorry. Then the 50% mark of this is the 3-month basic consequent encroachment. Yeah, that's not a coincidence. Okay, we'll come back to this. I just wanna check out something. So these are the highs we are targeting, right? Yes. These lows. So I had someone ask me, Kuti, these lows, when are we gonna target them? Look how low this is, right? Can you see? It fully respected this area. You can expect us to target this low to come back and fulfill this area and go up, like super up. Like those are the type of trades where this would take out the high, where this candle will close within, right? The next candle goes up, like where it gives people the idea that, okay, we are going higher. We break this high, the candle comes back weeks and closes somewhere here. The next candle, monthly candle, goes down back into this area. The January candle, which will be going back into here and respecting, then the year begins, we're up again. Like, I'll share my juice and how I know these seasonal tendencies, but not yet, guys. We're still on episode 3. No, we need to get, I can't share everything because it's gonna confuse you also. So anyway, you can see that these are the areas we bounced off. Like, as I said, we went up, exhausted, and went up again. We went up from down there, exhausted here, went up again, exhausted here, right? So when we break this high, you might find that we're going to come back and exhaust in here and go up to break this big high, because this high was set when 2021, November 2021. And usually, as you can see, we set highs in November. So also you might find that we might change and go up higher, break this high and continue going up. Right. Let's go to the weekly chart. Weekly chart. So, did the week close above the monthly SIBI? Did it? We can say it closed on the line. Wow. Okay. So, it broke the high. So, this went up, obviously, exhausted. Right here, it broke a high. So, since it broke this high, I'm talking about the price here, with this order block. Since it broke the high here, it won't come back here, I know. Knowing the market, if it wants to initially use this area as a buy area, let me not confuse you. Okay, let me say this. You see this area here, right? If we want to come back, bounce into it and use it as a buy area, right? Just know that they are going to be higher prices. But if we don't come back and use this as a buy area, an area to buy, just know that if it goes up, continues up, takes out this high without coming here, just know when we come back down, we're going to violate it and go lower. That's what normally happens. And we're going to use like this order block for a day or two, range. Then there is that one day that's going to have news injection, down. Then you know we are in a different type of movement now. So, let me mark it. But if we use this area, just know that Nasdaq is going to create a new high. If we use this area, I really don't, to be honest, I don't want to see us using it yet. Because if we use it, we are gone. Right. The market comes in here and goes up here from here. So what we want to see is initially when it gets to these highs here, it turns here and starts going up again and goes up and breaks the high, so that when we come down, boom, we come in this area, we range, lower. Then from here, we can catch our perfect buy to take us up. And the buy we catch takes us up, and yeah, we know that we are no more coming back for now. Like, those are the type of things we need, type of things we want to see. Knowing that you can catch that low and hold a trade for months or a year. But those are not my type of trades, hey? I don't have that type of patience. I take 15-minute trades and I'm done. And you might ask, why do I need to analyze everything to take like short-term trades? Because I'm really keen on knowing what I'm really looking at my perspective of what's gonna happen. So here, high broken probably. Yes, high broken. Let's see. What are we initially respecting here? So there's a SIBI here. A daily SIBI right here that we are respecting. That we're coming back to retest. Daily SIBI. We are coming back to retest this area. And if you can see, last time we were in this area, we rushed out of it. We came back into this area, we rushed out of it. We are coming back again and we broke the high. You might find that we will rush out of it to go lower again. But you might find that, okay, what happens is that what I said. We come here. You see right here? When the candle comes back, have you seen, guys, when the candle breaks, like it leaves a red candle like this first, goes up, then the next candle comes back and turns here, right on the tip of this candle. For you who've been wondering, what is that and what? It's an immediate rebalance of price, meaning it's not even leaving a fair value gap like it did in these areas. You see here it left gaps. So if it comes back and does an immediate rebalance today, just know we are going higher, and we're gonna go higher like we are breaking this area and going high, then it's gonna come back down. knowing NASDAQ. It usually does that. But anyway, we broke this high. This high is not broken, but we are in a key daily area here. We should not forget that. We are in a key daily area. So what I can do is, wait, what's the visibility of this area? Let me just fix it quickly. Okay, it's perfect. We are in our daily chart. On our daily chart, I mean. Here's a low. Boom. What am I doing? Boom. It doesn't wanna, okay. I was wondering what is happening. Boom. Here's another low here that we broke. Boom. Let me put it like this. Boom. Wrong place. Sorry guys for these ads. Right. This low broken. Okay, here's our initial low. So here, remember guys, I said in the last video, we came up, we ranged for a while, range, and broke the low first. So that means we are going lower. We break a low first, meaning we are going lower. So what the market has done, and I love that it's doing it, is we broke the low, came back, it violated the area I was looking at, the sell in this area, right here. There's another daily SIBI here, right here. You see? Right, there's a small area. You wouldn't notice it. It violated the area. Now where are we going? We are going higher. We are going higher into breaking this high. We break this high of this range. Just know that we take the high, and by taking the high, we're hitting the resistance of the daily SIBI right here. We're hitting the resistance of it, right? Can you see? This is the resistance of it. And we are breaking the high, and that's enough to take us lower to come break these lows. So, interesting thing about the market, it breaks the sell side. If it breaks the sell side first, it'll go back to the buy side so that it finds the power and it finds the use to go break the sell side. You know, in my head, I thought maybe the perspective has changed. We are going to higher price. But it might happen that we respect this area by breaking this high and turning right at the resistance of this area and going lower to come break this low. But I'm not saying, okay, expect that trade to happen within a day. Those are the type of trades where if you are patient enough, you wait a month or two. You should just know that. But anyway, what's next? Let's go to 4-hour chart. 4-hour chart, I'm sure there's a fair value gap we turned by here. We turned at what? We turned at the order block. Well, we broke it. We broke the high. You see, we broke the high, so we turned. And in the 4-hour chart, oh guys, the reason why I didn't put a lot of consequent encroachments, I did not want to confuse you even more. I'll put in more. I just wanted to give you an idea that it's at the 50% marks. Because if I put in a lot of them, a lot of you will have questions on how to use them. Because you can use 2 consequent encroachments of the higher time frames as a fair value gap to enter. But that's something you need. Like, you will be able to master once you get the idea of what's happening here. So, those wondering, when there's 2 fair value gaps like this, fair value gap number 1, fair value gap number 2, right? I know there's you guys wonder, okay, what does Mystery Blues FX do in these areas? So obviously guys, let me be honest with you, right? I wait for it to come back into this area. Normally they turn here at an order block and it's the 50% mark and it goes up. If it doesn't do that, I wait for it to come respect this area. When it comes back into my area right here, it will break it. When it breaks it, the retest into this bigger area, that's when I buy. This isn't the 4-hour time frame. Just know that. Let me repeat it again. The market will go down. If it doesn't turn here, they usually turn at the order block. This is an order block. And this is the 50% mark right here at the order block. Just see, it turns here and goes up again. We'll probably turn there today. But if it goes lower into this one, I wait for it to respect it, break out. Once it breaks out, it's going to retest this bigger area. That's when I buy. It's much more explainable in the lower time frames, right? So here, let's find the consequent encroachment of this area. You see? It's not a coincidence that the consequent encroachment is on the order block. I don't put consequent encroachments in the 4-hour charts. The hours, if I would do that, my chart will be hectic, eh? But let me just put it, what's this, a busy. The market would look so hectic. But yeah, we might turn off here. This is an order block right here, and there's a consequent encroachment of this area. So you might see the market just hitting here, going up again, breaking this high to go to the area that we are initially looking at in the daily. You see? And the daily will confuse you. So let's do this. You know what? Let me just get to business and say, okay, let me fix the visibility of this, sorry, real quick. Don't show in the months, show in the minutes and hours. Okay. Also this one. Visibility, sorry. Show in the minutes and seconds, but not in the months and weeks. And days. Okay. So, let me change the color of this, hey. Let's make it green. I'll make my CVs green from now on, just to get a different idea. Let's make this also green, but this is a monthly one. See? Okay, guys, I want to end this video as it hits 30 minutes because I know people's time span. I give out a lot of important information, and obviously one thing I may tell you is that information that is boring is powerful. I know this strategy, this information is boring. I know. When I started learning it 2 years back, it was boring to me, but I found the juice in it. That's all I have to say. But I'm not doing this for viewers who are gonna run and say, okay, this is boring, let me go trade the retail strategy. If that's good for you, that's good for you. I have no problem. I'm just putting people on who have that type of feeling of wanting to be unique, and also knowing that they have the means to stay consistent and listen and put in the time to stay consistent. So by the way, guys, just to summarize this whole thing, I want us to come respect this area right here, right? I want us to come respect it and take out this high. We take out this high, that's enough for us at this area, at the resistance of this area, to go back down and come take out these lows. That can happen in the next 3 weeks. Something that can happen. Keep in mind. Or we may find a day that has news, impulses up, we break this high, we find an entry above this high to come back down. And if you find an entry above this high to come back down, it's also a setup that we go lower with. So guys, this was yet another good video. I hope you took down a lot of notes and learned a lot. Most of you didn't reach the end of the video, but it's cool, guys. Another video is coming your way soon. Another day, another dollar. But anyway, guys, keep tuned like, share, and subscribe. And tell your friends about this. Mystery Blues FX. Take them to my TikTok to see the tea. Yeah, we're chopping every week. We're chopping in the Signal group. 250 for Signals, by the way, guys. 250 lifetime Signal group. Yeah, and those who want me to mentor them, DM me and we'll work something out. Also, those wondering which broker I use IFX brokers for the smaller accounts, and the bigger accounts I won't give away my broker yet. So yeah, guys, keep on chopping, keep on killing. Yeah, I'll put the link for the IFX brokers in my bio. Yeah, keep on chopping, guys. Let's get to business. This is a nice